those rate cuts or even hike again if inflation gets pushed up to keep the uncertainty in check. Let me break down why the RBA might do this. Imagine the economy is a bit like a car going down a hill, where the hill's inflation pushing it faster. The RBA's interest rate is the brake. When inflation picks up speed, the RBA taps the brake by raising interest rates. The higher interest rates make loans for houses, cars, businesses, everything more expensive, and this tends to discourage people from borrowing and spending too freely, which can slow down price increases. In this scenario, Trump's tariffs are adding weight to the car, making the car roll faster. It's inflationary pressure. Mortgage costs and loan affordability. When the Reserve Bank moves interest rates, it's not just a number. It directly impacts the interest you pay on a home loan. For anyone saving for their first home, loan affordability is the single biggest factor in determining what price your property you can aim for. If the scenario described plays out, tariffs drive inflation, which nudges the RBA to keep the rates higher or lift them, then mortgage costs are likely to rise and Aussies are going to feel the pinch. Here's how it works. Aussie banks and lenders typically tie their mortgage interest rates to the RBA cash rate. When the Reserve Bank hikes rates, lenders pass it on and your home loan interest rate goes up. If you're on a variable rate mortgage, which most people are in Australia, your monthly repayments will also increase in step. Let's unpack that next. Rising construction supplies. Houses aren't getting cheaper to build. Buying existing houses is one route, but the governments have tried to put some incentives. In Queensland, they're waiving stamp duty for new builds, and it could be exciting to try and build your own house. Regardless if you're trying to buy a brand new house or look at an existing one, the overall housing market is influenced by how many houses are being built. Properties sit still, they don't sell, maybe it takes longer, and both parties are more cautious in the negotiations. One thing to note though is that not everyone reacts in the same way. Some savvy or brave buyers, like we saw in COVID-19, saw those opportunities as a moment to buy. And if the competition slackens because many are fearful, then those prepared to be optimistic might get a good deal. Conversely, if you believe the worst case scenario, high interest rates, higher cost recession will play out, you might be extra cautious and it could come down to your individual circumstances or like your risk tolerance.